Natural gas at the moment, another gap down. We had an incredibly quiet week last week with the natural gas, and it was a little bit disappointing with trading activity. But again, just like it was the week before, we had a very, very stable week, big gap down, very stable trading week, big gap down. Probably looking at a repeat of the pattern here, looking for... Good afternoon, ladies and gentlemen, and welcome one and all to the Markets Now session this afternoon, where we're going to dig into our market analysis and economic impact report breakdown. We're going to get things off to a little bit of a quick start here today. I've realized that I actually have an appointment at 2 p.m. That I completely forgot about, so we're going to get things rolling immediately and see what we're looking at this week. Good afternoon to you, HSE. Good to see you, James. Bonjour to you too, sir. And good afternoon to everybody out there on YouTube. Good to see you guys and girls. I hope you're doing well and enjoyed a nice weekend. So guys, we have got a relatively quiet week this week with regards to our economic data. We don't have a great deal to work with that's predominantly driving market factors, but make no mistake, we are looking at some pretty decent opportunities as well. Markets are trading into some pretty big liquidity points across the board. That is over and above what I've already provided in terms of this week's 4 primary trading pairs. But it goes above and beyond that. Like I said, I've posted up obviously our 4 picks, our 4 choices this week, but there is a lot more to actually look at this week on top of that. In terms of the economics this week, we have a highlight of the FOMC minutes, which is the main talking point this week, especially with the shape of the Fed at the moment and what's anticipated with them. And we also have a couple of interesting equity picks, which I've got more news on, but I will leave that until the latter half of the session. Of course, this afternoon, folks, it is going to be a little bit shorter than usual, and that is predominantly because it is a US public holiday today. We have President Washington's birthday, which is bank holiday for the US, and so limited to 0 trading activities in the US markets this afternoon. So we will be... We won't be trading the market at all. So this is purely a breakdown session of this week's market report and what we've got in store for us all. So first of all, let's start from the top then. We've got the S&P 500, the USD versus the Japanese yen, natural gas and gold as our 4 top picks this week. Good afternoon to you, Matthew. Good to see you, buddy. So the S&P at the moment is trading down at the floor of big liquidity and looks pretty good for a move up. We're currently trading at the break of structure for this trade higher. So I think it would be nice if we could get the break of structure this maybe overnight throughout the Asia session, possibly into tomorrow morning's sort of US pre-market. And then we could look to take that market right the way back up to the top. I'm not sure if we'd reach that just purely off of a US Open tomorrow, but make no mistake, I do believe that is where it's heading. We also have the USD yen, which is trading down at big liquidity. We've come down to a previous major inflection point, and it is building up, as you can see here. Let me just zoom in here so you can have a little bit of a better look. So you can see that the market is really building up its orders in here at the moment between the break of structure point and big liquidity. Lots and lots of money flowing into the market here. We do have this, which is a TRF, which I also wanted to list. We can break this down into a relatively short-term intraday trade, if you like, and then we can follow it up by the longer-term swing trade back up to the previous highs, or alternatively, we can simply just wait for the market to travel up here, clear out all of the noise, And then once we get up trading to, you know, sort of this level here, I would say that we are comfortable to take the trade right up to the highs there, with the stop loss down between the 50% point between these two areas in here. That's going to yield you guys around a 1 to 3, maybe a 1 to 3.2. Very, very nice return. It does look pretty good. We do have a couple of factors at play which need to equally support this, not just the technicals, which still up in the air at the moment, but it could certainly roll that way as the week proceeds. So we'll keep eyes peeled on that USD yen. Natural gas at the moment, another gap down. We had an incredibly quiet week last week with the natural gas, and it was a little bit disappointing with trading activity. But again, just like it was the week before, we had a very, very stable week. Big gap down, very stable trading week, big gap down. Probably looking at a repeat of the pattern here. Looking for price action to slowly trade into big liquidity down here at the floor. This is a massive daily inflection point, by the way. You can just look left on your own charts to determine that. We'll also have a look, obviously, in a moment. But nevertheless, looks really good. I think if we can get back down there, it is time to start looking at the bid. And yeah, looking at that market coming back up to the highs. At the end of the day, we're going to be looking at filling the gap. Right, so the market comes down, we gather the orders, comes back up, fills the gap, and then from this point on, we either take the decision to continue trading higher to fill up the last week's gap, or alternatively, we can look to continue shorting it as it weakens off up here, back down to the lows. We may run a situation whereby the market's had this huge downturn, we've shed loads and loads of last year's gains, and then in this area here, we're going to see the order block formed on the daily time frame, which is essentially the reduced time frame, the lower time frame range that we see up and down price action for a little while before the market starts sort of gathering steam and you know, making higher highs and stuff and changing the direction of the trend. Good afternoon, Scotty D. Good to see you, bud. So next up, and the fourth choice of this week, we do have gold back in the hot seat. Looking pretty good at the moment in terms of its positioning. We've got a really nice wedge going on here at this time. We've got nice structured highs, really nice structured lows forming. We're at the pinch point right now. If we get a breakout below the ascending level, then a really nice margin back down to the previous lows is on the cards. And alternatively, it is an ascending wedge, so it should play out whereby we get the breaker structure up above and we see the continuation back to the previous highs. That is the sort of prime choice. Of course, at the moment, we don't really know if that's going to be the case just because of the fundamental backdrop for this one. But right now, it's positioned really well whereby we can be prepared ahead of time on either side of the market. So no matter which way gold goes, we should have a really good line on that one. And it would be nice to think that soon enough we will be able to look at some profit getting returned to us from gold. Now, as we go down here into this week's market challenges, as I mentioned, it is a very, very quiet week. We start the week with US initial jobless claims at a 2 out of 10, the FOMC minutes at an 8 out of 10, and the US core PC price index at a 4 out of 10. I think a 4 is really gracious. I think, if I'm not mistaken, yeah, it's the same on global market impact scale as well. So that's what we're looking at. Really, what it's going to boil down to is the FOMC minutes this week. That's where the market volatility is going to be, and that's at 7 p.m. And the minutes is not a Fed event by any stretch of the imagination. I often find with FOMC minutes data that the effects of it can take a little bit longer to bleed out into the markets and be digested over and above, say, an interest rate decision or a CPI event. You don't get that initial big volatility strike that we do quite often see there. So, you know, we'll pay attention. You guys are going to get a good update from myself once I've personally digested the data and be able to translate it into sort of, you know, easy to digest information and what it means for the markets and stuff like that. That will all be in your hands the morning after it takes place. Moving down into the SSV, honestly, I can't even remember a week where it looked so stable. Everything within the margin of the 50-50 long short, everything. The VIX is the only notable call out, I guess, at 53.11, but that's only because it's jumped quite far from 44, which is where it was before, I think. So that's actually had a bit more bullish volume in it. The VIX at the moment is trading up at around 20, I want to say, maybe 20.5, which is increased level of volatility, opportunity in the markets. Honestly, we're kind of yet to see it. I think last week was pretty quiet. We certainly had a decent NFP, but the CPI was a complete washout, wasn't it, on the Friday? And yeah, I think it's really sort of, we've seen increased levels in the VIX because of the risk on, risk off shift that we had in our precious metal markets, energy markets, natural gas obviously taking the big fall, the big short, pun intended, I suppose, and things like that. But yeah, this time I don't really see too much of that, positively affecting us in our US indices this week. But I could be mistaken. It could be a big one. Who knows? So moving down into the economic and order book impact report, again, very much the same thing. The FOMC minutes actually registering as a 9 out of 10 in terms of broad market impact. US initial jobless claims and core PCE are the same as above. Moving down into the MFT down here, indice bonds and commodities markets all completely stable and very much the same. Equities in focus. We've got one outlier this week, which is a particular favourite of mine, actually. Some really big things that these guys are doing at the moment. They are certainly worth a look. You're looking at a 2-week to 4-week sort of price-time ratio return. That's what you really want to be aiming for. And yeah, I think it's got good possibilities. The final one, block, looks immense at the moment. Really, really nice. Very playful. And you can get it for a steal. So please do check that one out. And then finally, with institutional buying interest by sector, not a lot of money going back into the markets from hedge funds this week, to be honest. 2.2 billion was the number one, and that was in fintech. Defense didn't even make the list here. Cloud infrastructure at 1.9, healthcare at 1.6, and consumer discretionary at 1.3. So a bit of a downtick, to be honest, in hedge fund investment over the weekend. Now, please, for the sake of due diligence, the information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in the financial markets involves significant risk and may not be suitable for all investors. So please feel free to go and read the full disclaimer, T's and C's and everything found on the UTC.com. Now, let's have a quick flash over to the chart, and don't worry, I haven't forgotten about what I said at the beginning about equities. That's to come. So, change stream. Let's go. Right, guys. So, obviously, there's no trading activity for this afternoon. Just wanted to touch base on natural gas here for a moment. Let's get up here to the 15-minute time frame. So, a couple of real nice big gaps. Natural gas plan of action for it to trade lower into liquidity, aiming for between 330, 325, and then to look at the buyback back up to the highs there. That's ultimately what I'm looking for. And then once we get to around this area, we would have officially filled the gap, and then we can look to either continue along or not. But really nice big level of liquidity on this natural gas chart at the moment. Super nice. So it does make sense that we may see a continuation back up to the previous highs. The other thing I wanted to mention as well is the USD yen. Very similar. Really nice bottom here at the moment on this chart. Beautiful bar that we've got today as well. Nice big daily level of liquidity. I think once we get the structural breakout, a move back up to around 157.30, definitely going to be on the cards. Look at the previous price action. We've done this so many times over successfully as well. This is a beautiful trading margin here. Even before the big short, this is such a beautiful margin to trade. So really looking forward to getting stuck into that one. And gold is where it's currently trading in the moment. Great margins on either side of the market. Really good availability. If you go down here to the 15-minute time frame, you can see the kind of opportunity that we have. This won't be a trade idea that will be done and dusted in the space of 24 hours, of course. This will be something that's worked with and managed actively. It would be nice to think that we could possibly scale in on this or look for some really nice risk-reward ratio, I believe. we've got the margin we've got the margin of availability definitely playing to our strengths here. So I think especially that long could be really something. And it'd be great to get in for a trend continuation opportunity on this one from a decent price. We shed so much in terms of gains down here. And even though, the market's kind of gone where it has, we've definitely got a really decent opportunity to... What's the term I'm looking for? Kind of... there's a particular word that I'm looking for. It's like, save ourselves from the lack of poor trading that we've had on gold recently. Or I speak for myself, to be honest. I speak completely for myself when I say that. Saving myself from the lack of the gains on gold at the moment, considering we've been in one of the biggest bull markets we've ever seen in the commodity. And that's about that. So, finally, before I wrap things up with the market report breakdown and we come to the Q&A time, I know I've said this a couple of times, but I really, really want to put some effort into equities more so than just the market report. But I really want to get you guys into just getting interested in the equities markets or stock markets, whatever you want to call them, if you're US or UK. It's fun. It's a completely different way of navigating the markets. Company research, finding golden nuggets. There is a real interest and excitement around it, a buzz around it that purely looking at technical analysis or staring at the economic calendar and looking at which direction CPI is going just doesn't scratch. It's something that you guys obviously know I've got a huge stake in, more so than just the simple CFD markets and stuff that we look at on a regular. So I really want to sort of bridge that gap because it's something that we've tried to do it in the past and it's been fun, but it hasn't really been that sustainable. But I really want to dig into this area more, considering we've got the platform for it. We've got the platform, we've got the time, we have the ease of access now. I mean, yeah, exactly. That's it. James says you used to do that years ago, but never carried it on. It was something I wanted to learn about. Yeah, for sure. And I'm gonna do it. I am like, this is me saying I'm gonna do that. I'm definitely gonna get stuck into that more because it is. It's just an area. It's just an area that I have a great interest in, and I would like to share that interest. And I think the best work, and the best services come out when you genuinely, when you generally have an interest in something. And so I just don't see the point in, always managing my own personal portfolios and stuff behind the scenes, but not really running that. The thing is, guys, is when you're trying to, you're obviously providing a service to a certain group of individuals who are learning how to trade, and their trading access is then obviously focusing on prop firms and funding opportunities. Equities doesn't really come into that hugely, right? But the thing that equities really do shine, especially nowadays with fractional share buying and the ease of access that you guys have got now with all the different platforms that are available, is the fact that even if you have just £50, or $50, you can get stuck in because you can buy $2 worth of Microsoft now on fractional share options and stuff. So it's become so easy and so widely accessible that you can experience everything and get a genuine understanding of how it works with next to no risk. Dependent, of course, you can do whatever you want, but obviously, as always, I am who I am. We're going to be sticking to some really stringent risk tactics, but it does mean that you guys can enjoy all of that. And the other thing about CFD prop firms nowadays is I do believe you can trade CFD equities. But the downside from what I recall, especially when I used to, run my own prop firm back in the day, we won't talk too much about that experience, of course. But when I did, the spread and the cost to trade equities on a prop fund was laughable. So there was just no point in even marketing it, which is one of the It was actually one of the things that I butted heads about with my old partner on. But yeah, it's just not really realistic to do. However, nowadays things have changed, and it's certainly worth getting stuck into. And so that's what we're going to do. Yeah, that's what we're going to do. Open another room and just do the 1 hour, just do a 1 hour special or a week or something. Yeah, I mean, it will be something like that. I mean, when you say another room, I'm not going to make another trading room. I just mean I'll put another channel in. I'll stick another channel in here, and yeah, and that will just be like purely equities. It'll be just equity focused, portfolios, investment pie, and yeah, we'll just work on ETFs. Like another huge one is ETFs. I'm so into ETFs, you know. Yeah, I assumed it's what you meant, James. But yeah, I mean, bloody hell, I trade ETFs like they've gone out of fashion, you know. So I'm going to be digging into all that stuff. So if that's something of interest, anyway, I'll stop going on about it now. But if that's something of interest to you, please feel free to join in. And yeah, that's about it. That's what I've got. So do you have any questions or anything, guys, before we wrap up for the day? Quiet one today, of course. Excellent. Nice one, guys. All right, well, in that case, I wish you a wonderful afternoon. As I mentioned, US public holiday. So take it easy out there. I mean, I'm not going to be trading at all. Just, yeah, for perspective. So I'd save it all for tomorrow. Save it for Tuesday, Wednesday, Thursday. Big 3 of the week. And yeah, we'll see how things go. And I'll check out the diary and work out when to carry out our session. I'll work out when to carry out the equity session, because it's going to be more informational rather than active trading exercise that we do. I may end up doing it more earlier than later, because that means then we can still get the US Open in the afternoon. So that's just a heads up. I can't confirm what day of the week and what time of the week it's going to be at the moment, but I do believe that it will probably be more in the morning than it would be in the afternoon. But because it's more informational, you're not going to be missing out anything by not attending it in real time. So if it is a bit difficult for anyone in here, don't worry, because you should get the full benefit of it, really, from the catch-up sessions. If you want to ask any questions in real time, then just watch the session and feel free to ask questions in the chat. We'll work at it. Yeah, we'll work at it from there. Stuck on the M25. Oh, I tell you what, that is not something I envy. I do enough of that, mate. Trust me. Once every couple of weeks. Bloody awful. Right. Ladies and gents, that's it for me then. Have a fantastic rest of the day. Been a pleasure as always. Wishing you a lovely afternoon. I look forward to catching up with you tomorrow. And yeah, if you're not a member already of the trading room, to those of you out there on YouTube on the outside of things, please feel free to come and join in on the action. No strings attached, of course. It is a free general chat room in there, and there's a couple of live events a week for those of you who don't wish to pay. If you do like the market insights that are provided in the UTC and you want that kind of action on a daily basis, then of course you are more than welcome to sign yourselves up for that as well. But by all means, do what you're going to do. Have a good one, guys. It's been a pleasure as always. Look forward to catching you tomorrow. See you then. Bye-bye.